What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday. It's time for the weekend. It's also time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. And this week, we are on earnings eve. We've got Netflix on January 23rd, just 4 days from now. We also have Tesla about 5 days from now, coming up on January 24th, followed by the rest of these companies over the next couple of weeks. We'll obviously keep you abreast of all of that and more, but we better not waste any more of your time. Kick things off like we always do with Meta Platform. Start of the week at 372.07, as this company is about 2 weeks away from posting their earnings. Shares up about 3%. Finish the week at 383.45. Instagram is going to give you a little nighttime nudge if you are under the age of, I think, maybe about 18 or so. So anyone that spends about 10 minutes on Instagram after 10 p.m., I don't know what kids are doing these days. I was pretty much in bed by 10 p.m. when I was an adolescent, I guess. But I guess they're on their screen at that hour of the day. So if you're viewing something on Instagram, you're going to get this little nudge. And apparently the little notification doesn't go away until you turn off the app, apparently. Now, Reddit, which is a relatively popular, more or less kind of like an old school forum, if you will. A lot of topics, a lot of discussion being had on Reddit, and it's launching, I would assume, probably an IPO this year. You're going to have several mature companies like Reddit go public. This is interesting to Facebook because I'm not on Reddit a whole lot, so it's not a platform that I know a ton about. I don't think they have a ton of online advertising on there, but certainly if Reddit's valuation spreads out, that certainly could lift the rest of the sector up, the kind of social media content sector up. Maybe not Meta to a certain degree, but if you start to go downstream to the Pinterests, the Snapchats, those types of sites certainly could get a boost if Reddit's IPO comes out particularly hot. Mark Zuckerberg made a lot of announcements this week, and he said that the company is investing in NVIDIA chips to build AI. Who isn't these days? Mark's saying that Meta is going to likely spend about $9 billion on GPUs. That certainly would be great for NVIDIA, as the vast majority of those are going towards those popular H100 chips. What's also interesting about Mark and Facebook's strategy, which we've talked broadly about here on the show, is their long-term vision is to build general intelligence or artificial intelligence, whatever you want to call it, but they're going to make it open source and make it kind of open source, quote, responsibly, whatever that means, and make it widely available so everyone can benefit. So Meta's going about this very differently. You look at a Microsoft strategy, they have kind of a closed source operation going with their partnership with OpenAI. You have Google basically doing everything kind of in-house, even with their TPU chips that they're partnering with Broadcom on. And obviously all their AI stuff is in-house and more or less proprietary to them. I think Meta is going this route just to kind of stick a fork in Google, because they know that Google's next revenue source could come from AI, but if Meta makes everything open source and does it responsibly and makes it widely available, well, maybe that'll put a little thorn in Google's side in terms of the revenue they can generate from AI. We'll see what happens there. Moving on to Apple. Start of the week at 182.05. Shares of Apple popping, rebounding. You'll want to see that from a technical perspective. Up 5.2%. Finished the week at 191.56. Meta, along with Apple and Amazon, all report their earnings on February 1st. Will be a busy day here on the channel. Now, Apple offering their iPhone 15, their newest phone, at a rare discount in China, as you had the celebration of the Lunar New Year in that great country. iPhones discounted, which is very rare, by up to 5%, probably showing some waning demand and certainly competition for the smartphone devices in China. Apple's appeal over the Epic App Store lawsuit was denied by the Supreme Court. This is more or less a loss for both Apple and Epic Games. Epic Games makes numerous video games, including Fortnite. Epic Games originally sued Apple more or less over the fact that Apple takes upwards of 30% for every dollar that flows into the App Store. So you can imagine a video game maker, for every dollar that you spend on the video game, 30 cents of that basically flows to Apple. Epic Games wanted you to be able to buy, whether it's a character or a token or the game itself, they wanted you to be able to buy that off of the app. So essentially you're playing, maybe you download the game on your phone and you click a button and maybe you go over to Epic Games website or another kind of third-party checkout, and then you're able to process your payment there and avoid paying the 30% to Apple. Apple saying that no, you can't do that. Well, a court did rule that developers can now include in their apps buttons, external links, or other calls to action that direct customers to other purchasing mechanisms like their own website. Epic wanted the Supreme Court to really strike this down and really give them full reign. Apple wanted it to be reversed back to where they could collect the 30% tax. No questions asked. Both got kind of what they wanted. I would say Epic probably making out better than Apple, and we'll see how this impacts Apple's earnings going forward. We'll see how many people are willing to move off of app to complete purchases. Now, Apple in the United States crosshairs as the DOJ said to file an antitrust case as soon as March. It's related to kind of their hardware dominance and how they wrap a lot of other services, including the App Store and payments, and force out competition. When is one of these companies not being investigated by the DOJ? Now, the U.S. Appeals Court reinstates Apple Watch import ban. And so Apple, what they're going to have to do here in order to sell these watches, they're going to have to come out with a new model at some point, but it looks like to me they're going to disable the sensor that is falling under this patent infringement lawsuit that the company has lost numerous times here. Again, I believe this was a rather large failure by Apple. They should have negotiated with this company many, many years ago, either A, to buy the company outright, or two, license the technology for a certain price. The fact that Apple let it go this long and then lost in numerous court battles is an embarrassment for a company this size. And if I was Apple, I would be looking for new legal counsel, because clearly the counsel and the advice they were getting in this case did not add up. Now, Apple Vision Pro, those awesome looking ski goggles that you can put on, is getting a cold shoulder from YouTube and Netflix. So popular video streaming apps like YouTube and Netflix, and reportedly Spotify as well, they're not going to have native apps. Also, the Vision Pro apparently will allow you to port your iPad app over to the Vision Pro. So from a developer's perspective, if you have an iPad app, probably with just some small configuration changes, you can make it a Vision Pro app. But allegedly, it doesn't even looks like YouTube and Netflix are going to do that. Instead, they're going to point you to the web browser. So I thought that was particularly interesting that these companies are not even going to do a native app, at least on the initial launch of the Vision Pro. Certainly could be a disappointment for those spending $3,500 plus tax. However, does reveal some high demand, at least on the very first day. Pre-orders were taken today. It looks like the headset will still be released February 2nd, but what I saw was most shipments of the device won't fall until March. Doesn't surprise me that you have high demand on the initial day. It's very similar to like a Cybertruck or something like that. But will this be like the PlayStation 5 or like the Xbox when those new consoles launch, where you have weeks, sometimes even pandemic related, you have years of demand and kind of backlog of demand for the product. For a $3,500 product, certainly be interesting to see. I know you'll have some early demand for devices like this, content creators, things like that. They might be able to get their money back based on like ads and things like that. But long-term demand for this device certainly remains to be seen. Moving on to Amazon, start of the week at $153.90, shares up about a point to finish the week at $155.34. Retail sales surprise to the upside in December. That certainly will benefit companies like Walmart, Target, Costco, Amazon, as the retail sector continues to consolidate around just a small few large retailers. Anytime you get retail sales popping, certainly will help Amazon, no doubt. Now, Amazon is investing in a sports network. This rumor was floated maybe a week or two ago. We talked about it, how there was this more or less kind of a bankrupt regional sports provider that has, I believe, MLB, Major League Baseball, basketball, and hockey games. And it appears that Prime or Amazon has made a video on this, or an investment, and now you're going to be able to watch those NBA games on Amazon Prime. That certainly would be good for some local fans. Now, iRobot, those shares of that vacuum maker are absolutely in the tank as the European Union looks like it is going to block the sale to Amazon. We're talking about a $1.7 billion acquisition going to a company worth about $1.7 trillion. And I will let you know, guys, I was at CES 2024 last week, as many of you that have been following the channel know, and I couldn't, there were so many of these robot vacuum makers. Competition is not light. There's plenty of these out there. These regulators, I don't know. I'll hold my opinion. I think you guys know how I feel about government regulators and regulation, especially when we're talking about a $1.7 billion acquisition of a company with dozens and dozens of competitors. And I saw the Samsung device looked awesome. There was other devices out there that, in my opinion, looked better than the iRobot. So I don't know what these regulators are thinking. And in fact, I don't think most of them do think for themselves very often. Now, Amazon to invest over $15 billion to bolster their cloud computing infrastructure in the great country of Japan. We've seen similar headlines as it relates to India as well. Again, Amazon reports their earnings February 1st, along with Apple and Meta. Moving on to Netflix, the company that's going to be first to report their earnings just 4 days from now on January 23rd. Looking forward to that, as the company started the week at $491.57, down 1.75%. Finished the week at $482.95. And Netflix ad tier, keep seeing headlines as it relates to this. Analysts over at Wells Fargo thinking that is going to pick up the slack to make up for dwindling, as they call it, paid share subs. Certainly when you look across the streaming landscape, paid subs are certainly starting to plateau, if not peak out, and in some cases decline at some of these companies. And so we'll see how Netflix is able to hold up. My guess, Netflix is just so durable. Their subscriber base seems to be willing to pay. Now, this was interesting. Small deal here, but Netflix is teaming up with a retailer in France called Carrefour. I don't know if I said that right. I took French in high school. I should know how to say that, but I don't. But it's basically a bundled service. So this retailer in France is going to allow you to pay, a couple of bucks per month. And basically you're going to be able to get access to Netflix Standard with some advertising. And then you're also going to get free shipping on goods. It's almost like Amazon Prime, but with like a partnership. And with Netflix, obviously. And so I just think this is interesting, because if it works in France, it could work in other regions around the world, and then maybe you bring this to the United States. Now, there are similar things in the United States. You sign up for T-Mobile or Verizon or whatever, and then they give you access to either Disney Plus or Netflix or something like that in a wholesale relationship. Be interesting to see if Netflix, has success here with this and then can roll that out. I think the international markets are probably ripe for that. Moving on to NVIDIA, start of the week at $555.69. Shares of NVIDIA up 7% to finish the week at nearly $595 per share. NVIDIA is the last report of all these companies, although you'll get some clues when AMD, Intel, and others, and TSM this week reports. NVIDIA reports their earnings on 2/21. Now, big reason why shares of NVIDIA are up is because Taiwan Semiconductor, which is I believe the exclusive manufacturer of virtually all NVIDIA chips, especially the high-end ones, company is forecasting 20% growth in revenue in 2024, driven by demand of advanced chips. So NVIDIA is coming in there, placing big orders, big guarantees, and it's passing all the way through TSM, which saw its shares just skyrocket on that news, and it followed through the day after earnings. AMD is leading chip stocks higher, as well as Barclays touts its AI benefits. I think with AMD, they're certainly going to benefit from AI, okay, but it's not going to be to the degree that NVIDIA has or will. But I think where AMD will benefit is they obviously have a lot of your traditional CPU chips. Those are going to make its way into traditional cloud. We saw the headline as it relates to Amazon, how they're investing $15 billion in cloud computing inside of the country of Japan. And so as you have more AI, it more or less expands the cloud computing demand as well. And that certainly will tangibly benefit AMD along with others. Moving on to Google started the week at 143.46. Shares of Google up a solid 2%. Finished the week at 146.38. Now, Google and Microsoft both report their earnings about 11 days from now on January 30th. That'll be a big day as well. Google AI scientists are in talks to exit and start their own startup company. Two scientists at Google's DeepMind are trying to raise about $200 million to start their own startup. Now, in an attempt to make this a less popular move over at Google, they have a special pool of stock-based compensation to try to keep these top AI researchers. But I tell you what, if you are into AI and you're a big researcher, man, you are in high demand and you are able to go out there and raise big money and not have to clock into the Mountain View offices over at Google and deal with all the corporate BS. And by BS, I don't necessarily mean that Google's pulling a bunch of BS, but there's all these different hoops that you have to jump through, where if you're running your own startup, obviously you're kind of calling the shots and you can do things how you want, whereas Google has to do things a certain way given how large and how popular the company's services are. We'll see if Google is able to maintain this, but this has been a big problem. Now, the company is voluntarily, though, laying off other workers. Talked about this on last week's show. All these companies are preparing their 10Q reports. They're getting all the numbers from the CFO. The CFO's looking at revenue and profits, and they're wondering how Q2, Q3, Q4, what is the story they're going to tell investors for the rest of this year? And you are seeing some layoffs. Has me mildly cautious as you head into the earnings season. Again, just a couple of weeks away for most of these companies. In fact, less than 2 weeks away for all of them, other than NVIDIA. It has me, a little cautious when you start putting these reports together and then you immediately start firing people. It makes me want to believe that maybe profits are coming in a little light. But when you read through the details here, you're only looking at about 100 layoff over at Google. That's not a whole lot. Sometimes these layoffs too are done. And look, we hope people that lose their job like this can find a new role. Certainly if you couldn't have YouTube on your resume, chances are you'll be able to land on your feet somewhere. But sometimes these layoffs are just kind of meant to light the fire under everybody else that doesn't get fired. But you're going to have pretty sizable job cuts in the hundreds in the ad sales jobs over at Google, mainly because Google's ad product and more or less sells itself at this point. Moving on to Microsoft, started the week at 390, up a solid 2% to finish the week at 398.67. Those are all-time highs, I believe, for Microsoft. Federal regulators are chomping at the bit to figure out who gets to go after Microsoft and OpenAI when you're the world's most valuable company and your shares hit all-time highs and you got boatloads of cash and the government, which is more or less flat broke. You can expect these types of things in the years to come. Now, December's U.S. video game sales, as relates to Microsoft having control of the Xbox operating system and games, more or less, and now owning Activision Blizzard, very nice rise, 4%. And I'm not a big gamer, okay? I'm playing some little kids game with my kids and stuff like that. Maybe as they get older, if they're into video games, I'll have a better understanding and a better appreciation for the types of games that come out. But this seems solid, right? 4% year over year after you've had, I believe, a few years of declines in terms of video game sales. A nice recovery there certainly will benefit Microsoft and Sony to a degree as well. OpenAI confirms a relationship with the U.S. military. Maybe this is a way to appease regulators. You just serve the military and maybe they get off your back. It's kind of a joke, but maybe it's not. Now, Microsoft's CEO says he has no issues with OpenAI's structure. He says, we just want good stability, meaning we don't want the CEO being fired on a Friday afternoon and then having to work all weekend on a holiday to bring them back. Moving on to Tesla, started the week at 213.18, and shares of Tesla basically flat or down about 0.5% to finish the week at 212.19. Interesting news from the EV sector as Ford continues to cut production of its really nice. There's a few people in my town that drive one of these pickups. Every time I drive one, I'm like, I just like, it looks like a traditional pickup, but it's got some features that it's the Lightning. I just think it's a nice looking truck, but dang, they're expensive. And the company is finding the demand is simply waning for the electric version of their popular F-150, and they're shifting resources to the Bronco and Ranger lines. I think the low-hanging fruit in electric vehicles has been picked. Everybody that's wanted and can afford an electric vehicle has bought one. Everybody that has convinced themselves either for one reason or another that they don't want one or don't want to buy one simply has not bought one. And going forward, it's going to be difficult, in my opinion, for a lot of these traditional automakers to wean themselves off of the combustion engines. I think waning demand, while it does impact Tesla, I actually also think it benefits them, because as you add waning demand, you have waning competition out there for Tesla, as they are planning to take the Cybertruck on a tour of China. So far, you cannot order a Cybertruck on a Chinese website, but it looks like at some point they're going to make that available in China. China, obviously a little bit different market than here in the United States. They tend to like smaller, cheaper cars just based on kind of the road conditions that they have to drive under. This Cybertruck is a beast of a vehicle, if you will, and we'll see how popular it is in China. Now, EV trends. Tesla is lowering its prices on some Model Ys in Europe, again, seeing just waning demand. You still have strong demand, particularly for Tesla vehicles, but I think in general, everybody that's wanted an EV, you also have had gas prices go down for many, many, many months. I don't look at the price of gas very often myself these days, but I'm certainly not sticker shocked like I was last summer when I was driving around. I think I was in San Diego, and I was seeing like nearly $8 a gallon gas out here in California, and I was absolutely shocked. Now, the times I've looked at gas, it's closer to 5. That seems more reasonable. And certainly if it stays or goes lower, I don't think there's much need for an EV for most people. Now, Elon Musk, probably one of the bigger stories of the week. In fact, I did a video this morning saying that Elon Musk wants 25% voting control in Tesla before advancing AI. The other thing that he wants to advance is robotics. And they showed, I don't have a video of it here, but he has his new Optimus robot folding clothes, which actually was a pretty impressive display of its capabilities. Currently, Elon Musk has about 13% in Tesla, obviously reduced sizably because he had to sell a number of shares in order to acquire the social media site Twitter. So some of this is self-imposed. We'll see if the board of directors with Tesla plays ball, but I think it indicates to you and everybody out there what the exciting investment opportunities are for the next couple of years, considering Elon Musk has a strong track record of identifying those things. Moving over to the technical segment of the show, S&P 500 looks absolutely beautiful. We are retesting a new higher high. You have made a new higher high over the previous highs. You are still locked in this uptrend. Any pullbacks in the S&P 500 should be bought. Anything south of 4,600 should be snap bought. And if you don't buy it, I really don't. I don't understand your strategy. Moving over to Meta. This company is just a couple of weeks away, or less than 2 weeks away from reporting their earnings, and we are setting up off the top of the range. So in that scenario, two things can happen, and I know it's kind of obvious. The stock will either go up or down on earnings, but both should give you a really solid opportunities. You get pullbacks in Meta. I mean, it would be a big pullback, right? You go from like, we'll call it 380 down here to 300, but the stock could do that. I think you purchase it based on most scenarios. You'd have to dig into the numbers. I'll certainly give you some guidance when the company reports their earnings. Big pullbacks in Meta absolutely should be bought, in my opinion, just based on the technical pattern. Now, technical pattern continues to move higher. Let's say they report earnings and it's just fantastic. I don't think you've got to chase. We've got other charts that we can bring up here when you blast to all-time highs, like NVIDIA, like Microsoft, like Apple. You blast to all-time highs, just wait for the back test. Wait for the back test. That is where I would step in. You've got another stock. I mean, this is kind of like semiconductors, but AMD just more recently blasted to all-time highs. This one can continue to run as AMD reports their earnings also on January 30th, along with Google and Microsoft, but you are going to get a back test of the highs on this one. Wait till that happens. Back test of the high, that's when you step in over there. Moving on to Apple. Just continuing up like a methodical kind of uptrend that we're in. It's a very steep uptrend where you're making higher lows, higher highs. The higher highs aren't overly convincing, but it looks like to me we're walking up to a new higher high with Apple. Moving on to Amazon. This one also very methodically moving up an uptrend. It's stuck right here in kind of the middle of a range. You're looking for shares of Amazon to push up into the 170s, you get up into the 170s, you'll likely see some resistance pullbacks. Again, you should be buying those pullbacks. All these stocks are in uptrends other than Tesla, so you actually should be looking to buy the dip in any of these. Remember, you don't buy the dip in a downtrend. You buy the dip in an uptrend. Just ask shareholders of PayPal, Plug Power, Lucid, Rivian, any of those stocks. Alibaba is another one. Ask any investor that has been buying the dip for the last year in those stocks how well that works. It doesn't work, okay? And some people are like, oh, you're trying to pick tops and bottoms. No, you're not. When you buy in a downtrend, you are actually trying to pick the bottom. When you buy in an uptrend, you are buying the trend, and the trend is higher. With Netflix, trend continues to be higher. Shares report their earnings, 4 days from now, pullbacks in Netflix, particularly south of 400. I know that would be a big move, but this stock has been known to move on earnings. South of 400 should be bought. Moving on to the, look at that candle. Oh my goodness. We were on that short-term uptrend, and then it went straight up in the air. NVIDIA is going straight parabolic. Wouldn't chase it here. Pullbacks in NVIDIA back down to 500 are very likely. Wait till that moment, and you can pick up shares of the chip maker. Google pushing to new highs. This is a beautiful flattening out of an uptrend. You had a very steep uptrend. It started to flatten out. Now you're making very convincing higher highs, higher lows. Pullbacks in Google should be bought, particularly south of, we'll call it 130, but you'd really be aggressive in that scenario. Moving on to Microsoft. This one just looks fantastic. Higher highs, higher lows. Pullbacks in Microsoft, even small pullbacks, can be purchased. The stock in the most interesting and different technical segment is Tesla. The micro trend is down. That is a downtrend. You actually don't want to buy the dip in Tesla in the micro trend. Now, you could look at the longer term trend. You can look at the intermediate trend and make arguments. I still don't think you're necessarily confirming any type of buy here. This doesn't look great. You're making pretty much lower series of highs. You're definitely making lower series of low. Looks like to me this one wants to maybe retest down here at about 179. There is some historical support for the shares at that 179, 180 level. Although if you break through that level, you're probably retesting down here at about 105. I think you're just hands off on Tesla until the company reports their earnings 5 days from now on January 24th. Hopefully you guys enjoyed today's show, and hopefully you have a fun and safe weekend. We'll be back next week with Netflix and Tesla earnings, and obviously we'll be back on Friday as well to recap it all. Hopefully you guys have a wonderful weekend. See you again soon, and good luck with your investments.